Most people make Social Security harder than it needs to be. Not because the rules are complicated, but because they believe they are required to do things that Social Security allegedly forces on everyone. Some requirements are real. Others are optional, misunderstood, or quietly ignored by the system itself. The problem is this. If you confuse the two, you can lose money, trigger penalties, or lock yourself into decisions you cannot undo. Today, I'm breaking down 5 demands Social Security truly enforces, and the ones it doesn't. If you are interested in this topic, please like, comment, and share to pass this information to others, and I will give a heart. A lot of people make their lives harder than they need to when it comes to Social Security, not because they are careless or irresponsible, but because they believe they are required to do certain things when in reality they are not. Social Security does mandate some actions and those are non-negotiable, but there are other areas where people assume they have no choice when in fact they do, and that confusion is costly because it leads to early claiming, unnecessary penalties, missed benefits, and irreversible decisions. So let's start clearing this up carefully. The first thing Social Security truly forces most people to do is pay FICA taxes. This part is straightforward. If you work for wages, you pay into Social Security through payroll taxes. The Social Security portion is 6.2% and Medicare is 1.45%, with your employer matching both. If you are self-employed, you pay both halves yourself. That is mandatory for most workers. But here is where people misunderstand the system. There is a cap on Social Security taxes. In 2026, that cap is $184,500. Once your earnings exceed that amount, you stop paying the Social Security portion of FICA for the rest of the year, though you still pay Medicare. That means someone earning $50,000 pays Social Security tax on every dollar, while someone earning $5 million pays it only on the first $184,500. That difference is written directly into the law. Now here is the first major exception most people never hear about. Certain government workers do not pay into Social Security at all. This includes some teachers, police officers, firefighters, and state or local employees, depending on where they worked, because they paid into a separate pension system instead. That is why rules like the windfall elimination provision and the government pension offset exist. Those rules are controversial and confusing, but the key point is this: most people are forced to pay FICA taxes, but not everyone, and whether or not you paid into Social Security determines what benefits you may receive later. Now let's move to the second thing Social Security actually forces in certain situations, something that causes a lot of confusion, called deemed filing. Deemed filing means that when you apply for one type of benefit, Social Security may automatically treat you as if you applied for another benefit at the same time. This rule mainly affects spousal benefits. Under current law, if you apply for Social Security retirement benefits on your own record and you are eligible for spousal benefits at the same time, Social Security treats you as having applied for both. You do not get to choose one and delay the other. That option ended in 2016 when strategies like file and suspend were eliminated. Today, if you file for retirement benefits and are eligible for spousal benefits, Social Security allegedly forces you to claim both at once, and that matters because once you file, the decision is often permanent. People often believe they can start one benefit and delay the other to maximize later, but in many cases they cannot. There is, however, a critical exception, and that is survivor benefits. Widows and widowers are not subject to deemed filing in the same way. They can take survivor benefits first and delay their own retirement benefit, or take their own benefit first and switch later. This flexibility is one of the most powerful tools in Social Security planning, yet many people never hear about it. Here is where things get uncomfortable. Social Security does not always enforce deemed filing consistently. Sometimes it is missed, sometimes claims are processed incorrectly, but if it is caught later, Social Security can retroactively apply the rule and reduce benefits going forward. That is why relying on the hope that it will not be noticed is risky. The rule exists and when enforced it can permanently change your benefit. Now let's talk about the third forced requirement, which is Supplemental Security Income, or SSI. SSI is not Social Security. It is administered by the Social Security Administration, but it is a completely different program. It is needs-based, funded by general tax revenue, and designed for people with very low income and limited resources. If you are on SSI, Social Security forces you to apply for any other benefit you are eligible for, including retirement or survivor benefits. People often argue that they want to wait because their benefit will grow, and while that logic makes sense, SSI does not allow that choice. If you are eligible for another benefit and refuse to apply, your SSI can be stopped. This is not optional. This is one of the clearest examples of Social Security mandating action, and it catches people off guard, especially those who do not realize SSI is welfare-based and subject to different rules. That is why you hear people say they are on SSI and receiving $2,000 a month, which is not possible because the maximum SSI benefit in 2026 is $994 for an individual, meaning anyone receiving more than that is on a different program or multiple programs combined. By now, a pattern should be clear. Social Security does force some actions, but only in specific circumstances. The danger is assuming everything is mandatory when it is not, because that assumption leads to rushed decisions, early filing, and penalties that last a lifetime, and the system does not stop you from making those mistakes because Social Security does not guide you step by step, they simply process what you request. This reality becomes even more obvious as we move forward, because the next requirements involve Medicare and one obligation most people never expect, which we will cover next. The fourth thing Social Security truly forces in most situations involves Medicare, and this is where a lot of misinformation spreads, even among well-meaning people. Many believe Social Security forces everyone to sign up for Medicare Part B. That is not true. You are not required to enroll in Part B if you have other credible coverage, such as current employer insurance from your job or your spouse's job with at least 20 employees, or if you have certain other qualifying coverage. You can delay Part B and avoid penalties if you meet those rules, and some veterans choose to rely on VA coverage instead, although that choice deserves careful consideration. However, there is one part of Medicare that Social Security does force on nearly everyone, and that is Part A. Once you begin receiving Social Security benefits at or after age 65, you are automatically enrolled in Medicare Part A. You cannot refuse it in most cases. Part A covers hospital insurance, and for about 99% of people, it has a zero monthly premium because they paid into Medicare long enough through payroll taxes. There is a very small exception for people who did not work or did not pay into Medicare for at least 10 years, in which case Part A can have a substantial premium, and those individuals may decline it, but that group is tiny. For almost everyone else, once benefits start, Part A is mandatory. People often confuse this and believe Social Security is forcing all of Medicare on them, which is not accurate. What Social Security does is enroll you automatically in Part A and give you a choice on Part B, with consequences attached to that choice. Those consequences are permanent penalties if you enroll late without credible coverage, which is why people feel pressured, but pressure is not the same as being forced. Now here is where this ties directly back to confusion and costly mistakes. Many people delay claiming Social Security benefits because they want to avoid Medicare decisions, not realizing that Medicare and Social Security are related but separate systems with different enrollment rules. You can enroll in Medicare without claiming Social Security, and you can claim Social Security later while already being on Medicare. Mixing those timelines up causes unnecessary stress and sometimes penalties. Now we come to the fifth and arguably most important thing Social Security forces people to do, even though it is never stated clearly and rarely acknowledged. Social Security forces you to be your own expert. There is no requirement that Social Security help you maximize your benefits. There is no obligation for them to explain every option or strategy. There is no mandate that they run comparisons or show you break-even points. In fact, many things they used to do were stopped because they were considered financial advice. Today, Social Security employees process claims. They do not plan retirements. They do not proactively check whether a different benefit would pay you more unless you ask the right question in the right way at the right time. That means the burden is on you to know what you are eligible for, when you are eligible, and how filing one benefit can affect another. This includes understanding deemed filing rules, survivor benefit options, divorced spouse benefits, disability versus retirement decisions, and how working longer or delaying can change your lifetime income. There are tens of thousands of pages of policy, rules, and sub-rules that govern these decisions, and no one expects a retiree to read them all, yet the system operates as if you already know the answers. If you walk into Social Security without a clear request, you may get a benefit, but not necessarily the best one for your situation. If you file for the wrong benefit at the wrong time, the system will not stop you, and in many cases, it cannot be undone. This is why so many people later realize they claimed too early, missed a survivor option, or failed to file for a benefit they were independently entitled to. Social Security allegedly assumes informed consent, even when the information gap is obvious. That is not a criticism of individual employees, it is how the system is structured. The result is that millions of people receive less than they could have, not because the law denies them the money, but because they were never guided to ask for it. This is also why appeals matter and why reviews matter, because if you disagree with a decision or believe something was missed, you have the right to challenge it, but only within strict time limits. Once those deadlines pass, corrections become much harder. By now, it should be clear that Social Security does force certain actions, but far fewer than people assume. The real danger is believing everything is mandatory, because that belief pushes people into rushed decisions, locks and reductions, and creates penalties that last for life. Understanding where you truly have no choice and where you actually do is the difference between control and confusion, and in the final part, we are going to tie all of this together by showing how to protect yourself from the most common irreversible mistakes and how to approach Social Security decisions calmly, deliberately, and on your terms. By the time people realize they made a Social Security mistake, it is often too late to fix it, and that is not because they did anything reckless, but because the system is built in a way that quietly locks in decisions without stopping you to confirm whether you truly understand the consequences. Social Security does not warn you that a filing choice may reduce your benefit for life, it does not flag that a different benefit would have paid more, and it does not automatically revisit your situation as your circumstances change, which is why the most damaging mistakes tend to come from perfectly reasonable assumptions. One of the most common is believing that once you claim, nothing can ever be adjusted, which is not entirely true. There are limited windows where changes can be made, such as withdrawing an application within 12 months and repaying benefits, or switching between certain benefit types when eligibility allows, but those windows are narrow and easy to miss. Another common mistake is assuming that if Social Security approved your benefit, it must be correct, when in reality errors in earnings records, missed auxiliary benefits, or improperly applied rules do occur, and unless you question the outcome, the system will move forward as if everything is settled. This is why understanding appeal rights matters so much. If you receive a notice that you disagree with, you generally have 60 days to appeal, and many people who do appeal successfully recover months or even years of underpaid benefits, while those who do nothing lose that opportunity permanently. Appeals are not confrontational, they are part of the process, but they require attention and follow-through. Another area that catches people off guard is income-related Medicare adjustments, where a one-time increase in income from selling a home, withdrawing from a retirement account, or working an extra year can trigger higher Medicare premiums 2 years later. Many assume those premiums are permanent, when in fact they can often be appealed if the income spike was tied to a life-changing event such as retirement or loss of work, but only if you know to request that review and submit the proper form. These are not fringe situations. They affect thousands of retirees every year. The larger issue running through all of this is that Social Security operates on the assumption that you will ask for what you want, understand what you are giving up, and monitor your own record over time. It does not actively protect you from underclaiming, and it does not revisit your case unless prompted. That is why the most important habit anyone on Social Security can develop is not panic or urgency, but regular review. Checking your earnings record. Reading notices carefully. Verifying deposits. Asking whether a life change affects your benefits. Taking a moment before filing rather than rushing because someone said you had to. Social Security does force some actions, but far fewer than people believe, and the real cost comes from treating optional decisions as mandatory ones. When you slow down, understand where the rules truly apply, and recognize where you still have choices, the system becomes far less intimidating and far more manageable. That is the goal. Not to beat the system. Not to chase loopholes. But to receive what you earned, when you are entitled to it, without unnecessary loss or regret. If this series helped clarify what Social Security actually requires versus what people assume is required, type understood in the comments so others know this is worth watching, and consider subscribing if you want clear, reliable explanations that help you avoid mistakes that cannot be undone.